Today we are going to be thinking next about the trend of de-dollarizing the global economy. You know, the stellar lineup of experts that we have with us. So I'm going to swing straight into my first question. David, I want to pick it up right at the beginning. When the dollarization of the global world, of this world started, which is, 1970s, 80s, the collapse of the Bretton Woods system, the invoicing of all commodities, especially petroleum and US dollar. Is that when the dollar became the dominant currency of the world?
I would argue it became the dominant currency essentially during World War II and particularly at the end of World War II, because even under the Bretton Woods system, while there was a fixed exchange rate regime, countries had to hold reserves, and most countries chose to hold their reserves in dollars. So I would say, at that point, the U.S. was 50% of the world economy. It was the only place left with capital markets really functioning. It was natural for the dollar to become the main reserve currency. So I would put it then. And then, as you suggest, with the development of the offshore markets in the 70s, that just solidified the role of the dollar.
Sachidanand, today we've got a situation where almost 70% of global trade and almost 59 to 60% of global reserves are in the US dollar. So is that the dominant factor why the dollar is irreplaceable today?
When you talk about the US dollar, I mean, the importance is not only because it is 85 to 90% of one leg of any forex transaction, right? I'm talking about spot, forward, or whatever hybrid you want to talk about. Essentially, 85 to 90% is accounted for by US dollar in at least one leg, right? There are two legs in every transaction. And I think there is another way to look at the dollar prominence. One is the fiat currency, which we spoke about, right? Some sort of multilateral system wherein it became prominent during Bretton Woods thing. And the petrodollar thing really cemented its place thereafter. But the other is the private side of how international trade takes place. I mean, private players, corporations, banks, and people like them. And this is where I think the dollar reigns supreme. So while as a reserve currency, the dollar is actually slipping. So from 70, it's become 60. And 1.5% every year is what it's coming down in terms of run rate. But I think in terms of the private acceptance, it's still irreplaceable. And yes, we know that China and Russia have started a slow-mo economic divorce from the US. But it is the private side that we need to look at very carefully.
So we'll come to this slow-mo divorce. That's a very striking description of the way it's happening, David. But then in the early noughties, we see a dramatic rise of China. We see China joining the WTO. We see China becoming the biggest global trading player in the world. It's the single largest trading partner of almost every significant economy in the world. Is that the point at which you think the first real challenge to the dollar emerged?
That's certainly one important factor. But, Chinese currency, the yuan, at the moment, it's less than 3% of global reserves. So I endorse the idea that any change is happening very slowly. And then I would add the role of the dollar is not just tied to the size of the U.S. economy. It's tied to certain institutional characteristics of the U.S. Good property rights, open capital market, flexible exchange rate. There's about $12 trillion of foreign currency reserves globally. So ask yourself, where do you put $12 trillion? Well, the world puts most of it in US capital markets because they're deep, reliable, transparent. You can move money in and out. The problem with China, I've worked on China for a long time. I lived there for about 10 years. It's very hard to move money in and out of China. So one big player like Saudi Arabia, they can make a deal with China. But you talk about your typical corporation, even corporations that sound very large, if they're holding a lot of money in China, they can't get it out. And it could be expropriated at any time because you don't have rule of law. So I think China needs a lot of institutional reform to complement the fact that it's the big trader that you were discussing. And later in this century, they may very well emerge as an important reserve currency, but not yet.
I think what really happened was 90s and early 2000s. We saw two divergent trends really take place. One was the experiment with the euro, right, which everybody thought would over a period of time really be a replacement to the dollar. That sadly hasn't really played out the way it was thought about. And then, yes, the sheer dominance of China in terms of trade, in terms of linkages, I mean, it became the biggest trading partner after the US for almost every important economy in the world. And that really started this move, I would say. So I think when you look back over the last, say, 20 to 30 years, we'll have to look at the euro and how dramatic that underperformance has been. And which is why I think the Chinese yuan and the experiments of taking yuan, really making it international, and then experiments started thereof, right? So had some of these geopolitical accidents or economic accidents not really happened, probably the Chinese yuan would have been in a much stronger position.
Now I turn to Russia. Russia has, over the last decade, been a significant player outside the dollar. It first faced sanctions in 2014-15 when it invaded Crimea. And then, of course, the big sanctions imposed on it after the Ukraine war. So what we've seen is that Russia has used its fairly vast oil reserves, and the fact that it has friends across a very surprising spectrum. I mean, it's got friends in the anti-American camp, call it China, call it Syria, call it Iran, call it Venezuela, call it Cuba. But then it also has trading friends, at least, in the pro-American camp. And India and Japan, I would wager, belong to that category. So we are now seeing a very unusual coalition which has come into play because of the Ukraine war and Russia's vast oil reserves and Russia's insistence on in trading outside the dollar, which may actually be the second serious challenge to the dollar. David?
I find it hard to take the Russian ruble very seriously. Obviously, Russia is an important geostrategic player in the world, and it's creating a lot of havoc now with its invasion of a sovereign country that's a UN member. But I like to look long term. And as you get out further in this century, it's really hard to see Russia as an important economic player. Hopefully, we're all going to be shifting away from oil and gas. We have to leave most of the oil and gas in the ground if we have any hope of getting climate change under control. And that seems to be happening pretty quickly now. And then Russia doesn't really have much else beside oil and gas. So China, of course, is on track to become the biggest economy in the world. It's the largest trading partner for many, many countries. China is a serious, complete economy, but with a lot of institutional weaknesses that I mentioned. I think Russia is just not going to be an important part of the world economy. India is going to be an important part of the world economy. We definitely are moving into a multipolar era, and I think that can be potentially a good thing, depending on whether we have an acceptable global framework for economic competition, for trade, for investment. Then I don't see any problem with having multiple reserve currencies.
Having said that, it is today, at least in the immediate aftermath of this very dramatic event, the Ukraine invasion, it has become the catalyst of a very unusual coalition. As I said, China, India, Japan, Venezuela, Cuba, Syria, Iran, all of them are fairly significant economies. So would you downplay this factor? Or do you think it's transient?
No, I just think China is the leader of that faction, frankly. Russia is the junior partner in the friendship with China. So I take it that you have the kind of alliance developing that you're talking about. But then you look at China's behavior, right? They have $2 trillion in US dollar reserves, basically. They're very tightly integrated with the US economy and the global economy. So it's a complicated world where we're very highly integrated, but we have these geostrategic problems or issues. I don't see Russia as that integrated into the global economy other than being a supplier of oil and gas.
Suchidanand, your thought on the question that I put about Russia being a catalyst because of its vast oil reserves, which will still have significance over the next couple of decades at least, of this coalition, not against the US dollar, but outside the US dollar.
So I think the bigger trend, Raghav, over there is Russia is more symptomatic of display of diplomatic and economic autonomy, right? Moving away from the dollar. They have gone through this cycle of sanctions before. There are other countries like Iran or some of these other countries who've suffered sanctions from the United States and the allies. And I think what Russia seems to be doing or seems to have triggered, and which is what I think you are indicating, is that countries who want to display diplomatic and economic autonomy are trying to move away, just to move away from the dollar. And in this, I think Russia is really probably the trigger. But I would tend to agree on the other hand here that they are not really. So I mentioned it is economic, it is political and military. Russians are still a sizable military power, but I do not think they have the economic heft going forward, nor do they have a very sizable political heft. But even the Chinese seem to be really struggling with this experiment, in the sense, if you look at the currency, it's pegged to the dollar, right? Their markets, largely linked via Hong Kong, again, is symptomatic of dollar flows. So I think this Russian and Chinese combination of trying something really to move away, I mean, de-dollarization is the term that one can use, but I think it has its limitations. What will happen in a multipolar world is currencies like INR or economies like India might really nibble away in terms of share from either the euro or the yuan or some other currency. So yes, there will be more internationalization of currencies such as the INR and maybe some other currencies like that.
While there is a decline, as you said, of 1.5 percentage points every year in how the US dollar is being held as a reserve by different countries, we are seeing that the loss, China is picking up almost a quarter of that. A quarter of that is going to China, but the balance 75% of that loss is actually going to many smaller currencies of many countries. So that is an interesting trend. I just want to throw a little, I won't call it a joker in the pack, but something which can be the imponderable in the pack, and that's the China-Saudi equation. I mean, China is trying to woo the Saudis. China is the biggest importer of oil from the Saudis. Today, all significant imports and exports of oil are invoiced in the dollar. Now, China is trying to get the Saudis to agree, and that's what we understand, to invoicing their imports of Saudi oil in the yuan. If they succeed in that, will that be moot? Will that be a really big impact? I'll go first with you, Satyadanand, and then I'll go to David on the same point.
So it could trigger a big move, like I think we mentioned when we began this, that the dollar really cemented its position via the petrodollar arrangement in the 1970s, right? What the US has been able to do is that it has built up a large net liability to the rest of the world, right? Which is 13-odd trillion, 14-odd trillion dollars. And foreigners now own about 42, 43 trillion of US assets. And this really means that the world depends on the dollar. So if the dollar really loses, it is the holders of the dollar really who are losing out. So yes, there might be a point in time where these signaling moves happen, China really cementing its relationship with Russia, with Saudi Arabia. But I think, Raghav, we are also looking at a future now. This is no more the 70s. The world is trying to move away from fossil fuels and oil and stuff like that. What happens in that scenarios, in that scenario 10 years or 20 years from now?
The deal you describe, Raghav, is the kind of thing that Chinese government likes, government to government agreement. And you can do that in a few cases. But the Saudis will be willing probably to take on a whole bunch of Chinese yuan, and they'll use it to buy certain specific things. But your typical private firm out there in the world market is not going to want to be paid in Chinese yuan, because what do you do with it? Maybe you're going to need it in 90 days. So where do you put it? Well, you can't put it into a 90-day market in China. You can't move it in and out easily. You can't convert it into Indian rupiah. So I just think I mean, that's what we see in the data, is that the holding of Chinese yuan as reserves is very, very small. Swiss franc, Australian dollar, these are larger than the Chinese yuan. So that's an interesting trend to see a little diversification towards some of those currencies. But of course, those economies are small. And so there's a limit to how much you can put reserves into Australia or Switzerland.
But do you think the Chinese government can swing the Saudis, or do you think that's a pipe dream?
Oh, I think they probably can. I found it was remarkable a few years ago. If you know, Xi Jinping visited Saudi Arabia and Iran on the same trip. He flew from one to the other. So I mean, China has a lot of clout, as the biggest buyer of oil, and now actually the biggest buyer of gas as well. So
right. So I want to end this very fascinating discussion with my assessment, and then I want to hear both of you. When you look at the two big advantages of the dollar, which you've already spoken about, one is it's seamlessly convertible. You can just convert it anywhere, anytime. There are just no barriers to converting the dollar. And the second is that when it comes to determining efficient exchange rates between various currencies, if you take the dollar out of the picture, then the equation between the two currencies with no dollar in that exchange mechanism is something that no country is really willing to accept, which is why even a country like India, although we've been importing so much of Russian oil after the Ukrainian invasion, we still continue to invoice not in rubles. We still continue to invoice it in currencies which are linked to the dollar. So David, your final word on these two looking like at this stage unassailable advantages of the dollar.
No, I agree with you, Raghav. Let me say, I do think the U.S. is undermining some of its advantages. So I support the sanctions against Russia because this situation with Ukraine is unique. But I think the U.S. is overdoing sanctions with a lot of different countries that are not threats to the United States. And if you overuse that, then you're just accelerating a process that would probably occur naturally. So some de-dollarization is clearly going on and will continue. But I agree with your points, Raghav, that those are reasons you mentioned that why this should be pretty slow. I wouldn't expect there to be a big change. Yeah.
And possibly capped at a particular threshold beyond which it probably never will go for the foreseeable 4-5 next decades. Satchidanand, final word from you on this phenomenon that we've just discussed.
So I think, Raghav, there is a stabilizing diversification that we are beginning to see now, finally. It's no more a single trick pony, right? It's no more about the dollar. It's no more about the euro or even the yuan. What we are seeing is there is a stabilizing diversification towards a mix of currencies say, the likes of INR, maybe, the Swiss franc, the Aussie dollar, the Canadian dollar. I mean, if you look at some data, what you find is some of these smaller currencies are beginning to find their way into this mix. So I think I would term this as a stabilizing diversification, but it is going to be happening in a very slow motion pace unless there is a global accident that really accelerates. Second, I think there is a destabilizing angle towards it. What we're finding, Raghav, is the US, the famed US reliability, stability, and predictability in policies. I think the US is becoming the single largest source of global accidents, policy accidents, politics, economics, or even militarily. I mean, a lot of the things that they've been doing, I mean, I'm not even talking about just the GFC or the Trump era policies and stuff like that. Basically, it has been the single largest source of risk globally. I mean, even the Fed is as we speak, the largest source of instability in the developing cohort. And therefore, I think if the US continues down this path, you might see a destabilizing angle towards the stable diversification that I spoke about. That might really accelerate the not the demise, but really accelerate the pace of de-dollarization.
Then I think as a panel, now there is great consensus here that while some amount of de-dollarization is inevitable because other economies are becoming important, the global pool is increasing, India is emerging as a large economy, but there is a threshold beyond which the dollar will continue to be supreme because of the inherent advantages of seamless convertibility, rule of law, governance, and also the fact that exchange mechanisms between or among a basket of currencies do need the dollar to give it a scientific conversion. Gentlemen, thank you very much. It's been a fascinating discussion.